Why isn't that working now? Welcome, everyone. Quick sound check. Hopefully you can hear my voice and see the screen. I think, yep, we're good. Thank you. All right, so here we are. And this is what I have in mind to tell you. In about 25 hours, because it's a market holiday in the US, the markets are going to open. And the stock to consider buying would be this one, AMD, Advanced Micro Devices. I'm going to spend a few minutes telling you why. Now, if you don't like that idea, here are some other ideas, and I'll go through why each one of them might be interesting to you. But quick disclaimer, this is just my opinion. I'm not a licensed financial advisor. This is not a specific recommendation for you, your retirement, or your trading account. You'd have to do your own due diligence, take your own risk, and all those sorts of things, because it's on you if you lose money. And you can, and you will lose money as you do investing and trading activities. But if you do them right, over time, there is the opportunity for outsized gains in the market. That's why you're here. That's why you're listening to me. So I have these ideas about information that can enhance your due diligence, and that's what we're going to get into today, while I tell you what stock to buy. So let me see if I can bring up a little bit of an explanation of what's been going on in the markets here. Okay. So let's see. Yeah. Where's my, there it is. Okay. So what happened last Friday was that the non-farm payroll report came out from the US government's Bureau of Labor Statistics. And they expected there to be 700,000, over 700,000 jobs created during the past month, but there were only over 200,000 jobs created. And so they missed by 500,000 jobs. It's a big, big miss compared to expectations, compared to the way things were going. And people were saying, oh, wow, that's that sounds like we're not coming out of the post-pandemic recovery. And yet markets seem to say, so what? We want to buy anyway. Well, a deeper dive would be, well, if that's bad news, then maybe the good news is that the Fed will stop decreasing the amount of money they're spending. They'll keep putting out the money, and they won't raise interest rates. And so that means more money for the stock market. So buy stocks. Whatever the reason was, buyers got in charge on Friday and they just kept buying. But what were they buying? See, some people think, well, okay, that means inflation's coming back. It just means that the Fed and maybe the US government, step in and spend a bunch more money and inflate everything even further. But when investors started acting on that belief last April, they put their money into basic materials and stuff. That didn't happen on Friday. Instead, there was a different group of things that were being put in. And I believe that it isn't an inflation trade so much as it is something else. I think it's the idea, it's the low rates continue trade, the low interest rates. Now that might sound like the same thing, but it's different. Here's why it's different. If you have inflation, then you have all sorts of input materials, the basic materials you make things with, those become expensive. And that means companies get their profit margins squished. And that means that certain companies are less interesting to invest than others. Companies that have lower margins but pay out good dividends and they're long-term businesses, consumer staples, Coca-Cola, McDonald's, those companies do well in inflationary times. Also, financial companies tend to do well in inflationary times. But because eventually those interest rates are going to have to rise in order to combat inflation. That's the way the market thinks. However, when rates get low and stay low, and it looks like they're going to stay low, then companies get more aggressive about borrowing. As an example, Apple has a ton of cash, right? Billions of dollars in cash just sitting in bank accounts. And that cash could be easily used to buy all the materials they need to make their phones, their chips, to pay their suppliers, whatever it be, right? But it turns out that Apple can actually make more money if they borrow at these low rates and then turn around and make the profit on their manufacturing, and they use their cash for a different kind of investment, another interest bearing investment, and they make more money that way. So it's just Apple, but for many other companies it's the same. Chip making companies, they have to lay down, large chip manufacturers, they have to lay down a lot of money ahead of time because their factories and foundries, it's like a 6-month or so lead time to kind of put everything together and do the clean rooms and the factories and all this stuff, right? So they benefit when low rates continue. As a result, I think that we're actually going to see AMD and Apple, NVIDIA, Taiwan Semiconductor, various others start to have a really good benefit. But another group that's going to benefit from this is the commercial real estate crowd. And commercial real estate on Friday, let's see, I don't know if you can see this chart very well, but this blue line going right here, this is the commercial real estate. This is a 5-minute chart of all the different sectors. Very noisy, I know, but what happens is commercial real estate starts out with everything, and then tech kind of goes up and holds, but commercial real estate keeps getting better and better and better throughout the day. So that's kind of a tip-off clue that that's what people are thinking about, is maybe commercial real estate. So there's 10 commercial real estate companies in the XLRE sector, and the one that hasn't taken off and really had a big move, but could have a breakout and have a big move, I think, is this one, CVRE. So that's the one to watch for there. It's also possible small caps, but whatever we're doing, I think this is the big story. You need to watch for breakouts in the coming week. So with that, let me get a few charts up and I can show you a couple of ideas for how we go about doing that. All right, so I've got a different setup here, and I want to make sure that it works for you guys. So let me know how you think this is going. If you are a regular or have seen me before, oftentimes what I do is I share my screen and then my video goes in the corner, and that might be better. Now I've got this large monitor and I've got this nice camera that are kind of showing things, and hopefully you can see it. And that just gives me the ability to point at stuff like this chart right here. This is one of my favorite charts for over a decade that I've used, but I haven't shown you guys before. And it's really useful because it's such a simple chart that you can put together. I want to show you how to construct this strategy and tell you why you think you might want to do this. All right, so There are two studies on this chart. The first is just a 20-day moving average, all right? So that 20-day moving average is the sort of bluish line there. And then I have these lines here, and this is on Thinkorswim. You can do this on lots of different platforms, but this study is called the Keltner channel. The Keltner channel uses the average true range, so just how big are the candles on average, right? And then it creates a lower band and an upper band. Well, I reasoned it like this. Look, if I look at what the average movement is, and then I get a measurement of what's sort of the top end of it and what's sort of the bottom end of it, then it makes for a really good measure of what is expensive and what is cheap in a short-term basis. And if I have the larger, slower, 20-day moving average telling me what the trend is, then within the trend, I can say, how can I buy cheap in the trend? I literally want to buy the dips. I mean, the big problem with buy low and sell high is what's low and what's high, right? You have to have some way of sort of coming across and just figuring out what is, what am I going to call expensive and what am I going to call cheap? So this is what I use, and it's been it's a short-term methodology. You're looking at trades that will last a month or less, right? And I want to find a way to buy the dips. Now, usually I'd like to buy gaps or tall range or buy the day after that, because statistically those have an advantage. But I found that if you are very careful and you buy on dips as noted by this study, that you get a similar situation. Plus, it also helps you just avoid stuff that's not looking good. Like, for instance, I gave you AMD, but full disclosure, I got to show you this chart, right? So AMD had this huge run up, and then you get to the top, and the spike goes way up there on the candle, and then it comes back down. See, I look at that and I think, I don't want. I mean, it's really hard for me to keep buying any of this, but none of it's cheap, right? It's all just pushing across the expensive. And it would have been great if I'd have bought here anyway, but I didn't see the trade until I was already up in this upper area. So of course I'm not going to touch it. And I'm going to wait for the pullback and hope to look for the breakout. Well, right there, this one is, see, you kind of see a like a flag pattern or a retracement channel, and that day right there breaks out of it. Good. So now we're looking to buy. But while it's slowing down, see how that trend line is curled over. We're actually downward trending right now. So I like to buy stuff only when it's upward trending. We're going to want to see if AMD comes back up and turns that trend up again. However, I think that regardless of what this is doing, AMD is probably a good choice going forward because of the reasons I mentioned. I feel like investors are going to be interested in tech, and AMD is an interesting play, and so, but right here, see where it hits this line. You come down and hit this line, and what does it do? It bounces right back off. If I were to be looking for this moment where the price comes down below the trend line, more importantly, anywhere where it touches this green line. So we got 3 days where it touches the green line here. And then if you had bought that, AMD hasn't even made its big breakout yet. But because I would expect that once it gets going, it's going to come back and challenge that high up at 122. It's sitting down now at around 108, 109. If it takes off, 109, 110, sorry, but almost 110 is right where it closed. Then it's $12 just to get back to the old high, and then I think it will keep going past that. So real potential good move there. I mean, we're talking about the possibility of 20% move in a month in the price, and even better would be, what could you do with options on AMD? Options, AMD has very liquid options, and so that's another reason why I think you should keep an eye on it. But in any event, if you're using this pattern, then you're looking for, see if you bought it, even if you bought it this day, which is not the greatest day, but even if you bought it on that day, then by this point here, you're making money. Right now, you're still profitable, right? So, okay, let's look at another chart, because I said, well, maybe not AMD, but how about Apple? Let's see what Apple looks like. See, here's, I got to zoom in so you can see it a little better, but while we're back here, see, there's that big chart. And as you get up and create that gap between the moving average and the Keltner channels, right? Oh, I should show you what those Keltner channels are here. Give me a second. If you buy, anytime it comes down below, you know, if you're buying that dip, you're just putting your limit order down there on that green line. Then you can maybe get that one or that one or that one. Any one of those is great. How about when it comes back down and you're below? Another one. How about you're outside here? Another good buy. See, anytime you're popping down below these lines, then you've got a great retracement. How about right now? No, not yet, which is why this wasn't the number one pick just yet. But watch it, because if it comes down a little bit, we're still upward trending. Apple is going to be a great stock to be buying the dips on. I'll zoom in a little bit here. There we go. You can kind of see better now. If you get this one, if you get this one, right? But what you're what I've got to show you is how to set those Keltner channels. So the settings on oops, let's go settings, and hopefully this text is it's too small, you can't see it. Anyway, there are three numbers here: displaced, which is 0, factor, which is either 0.5, 0.6, or 0.7. Right now I have it set to 0.7, so it depends on how wide you want it, right? And a lot of platforms you can only do just one, but ideally you want to go at least 0.5 if you can. And then the length is just 3 days. So it's just a 3-day Keltner channel. That's very important, because if you're 10 or 20, they're not going to look like that at all. So so you're just going to try to get a 3-day length and a factor of either 0.5 or a little wider if you want. And yeah, so that's how you create those setups, or that study setup. I think I can show it to you in Trading View here. And let me bring up CBRE here, because that was the other one I was mentioning. All right, so here's CBRE, and kind of hard to see, but if you're following on Trading View, which is, you know, the main charting tool, then I'm going to use the well, I wonder if I could just share my screen. It might be a better thing to do here. Okay, and get that out of the way. Hopefully you can see the screen now with me over the shoulder. And in this way, I'll be able to show you exactly how to set up the screen. Thank you, Mai. We can see the screen. Fantastic. Okay, so here's what we do. We're going to go to indicators, and on the indicators, we're going to select Keltner channels, and then we're going to open up the settings of the Keltner channels, because if you just bring them on by default, then that's what they look at, right? We're going to use the exponential moving average, but we're going to change the length to just 3, and the multiplier, if it will let us, we're going to change it to 0.5. And it did. Let's see if it'll even let us do 0.7. Yeah, 0.7 is just a little better. Average true range length is 10. I'm going to actually bump that one up to 20. See if how that makes a difference here on this platform. A little bit of this. I'm going to leave that. And then the style. What I like to do is put turn the basis off. That's the middle one. And the lower one, I like to have green lines, because, hey, that's time to buy, is my idea. And the upper one, I'm going to put red, because, hey, that's expensive. It's time to sell. Time to take your profits if you're already in it. That sort of thing. And then I'm going to add the indicator, which is simply the moving average on the chart. And the moving average always comes in as a 9-day on Thinker, or on Trading view charts. I'm going to make the style of that line a little thicker. Yeah, and a little darker. That might be too dark. There we go. All right. Okay, there we go. All right. So now it depends entirely on whether or not you want to buy the dip or if you want to buy the breakout. The breakout is right there, right where it is. So there's a couple of different ways to play this stock when you decide to buy it, if in fact you do. Then what we're looking at here is drawing tools. Where's my drawing tools? There they are, just off to the side there. Okay. I'm just going to put in a line. If I say here is the resistance, let's make that a blue line. And then if I say that's where I'm going to enter, because, you know, that's breaking the old resistance, right? So just anything above where it is now. If I buy above that line, then where am I going to set my profit taking targets? All right, I'm going to try and set up a trade with a stop loss and a profit taking target. These are easy to figure out because all I have to do is decide how often do I want to win? How often do I mean, not win and make profits, right? As a system, do I want to have high wins that are small percentage, or do I want to have big wins that are low percentage? That's the way I can do it. I can trade that off. If I can just go equally distant, then it's, you know, it's 50-50, it's a coin flip. I have to just get good enough at picking winners, right? I find that what I like to do is do you know, make it a little bit more than, you know, the average true range for a profit target, but then whatever that profit target is, 9867 to, well, let's see if I can get rid of the currency label. $175 to 98.75. Well, let's call that $2 up, right? So if I'm $2 up, then I want to be $4 down. So that means my stop loss is going to be clear down here around, you know, 94. See, and you can see that this is twice as far away as that. If I have this kind of setup, then I have a expectation that I'm going to win this thing more than 2 out of 3 times. I'm going to win this 66, maybe 70% of the time. So I buy something just at or above that blue line. My stop loss is clear down here, and my profit target is up there. Why do I want this profit target closer, but still farther away than, you know, the distance between the average true range lines? The answer is I want this to sort of break out with one of these candles. If it runs right up there and gets me, great, I'm done. But if it runs up and comes close and stops, then what I'm going to do is take the profit target off, move the stop loss up to break even, and then just trail behind it. Let it go and trend as long and as far as it will. And if I do that, then I might get some outsized winners. Like, for example, what I'm doing here on these sample trades that I put on for your educational entertainment. Microsoft and Spotify. See that? These are trades that when I put them on, I got into them with the idea that, you know, I'm going to hold back and then just try to let the profit target run. So I bought this back in the July timeframe, and I can't remember if it was before or after earnings, like early August. I think it was before, could be wrong. Anyway, if I was using this methodology, you know, I was buying the dips, right? But in this case, I was probably doing something more like buying the breakout, like buying that breakout right there. In fact, I think it might have been that was the gap day, and so I bought the next day. I think, see, this is not even the best entry. Look how long it just, you know, if in fact it was that, or it could have been this one, the gap, and then, you know, come along afterwards. But again, what I do is I say, okay, well, I'm going to put the stop far enough back and the profit target far enough forward that if it comes close but doesn't do that, then I can just lift the stop loss little by little. In this case, I've been lifting the stop loss little by little. Right now, it's sitting right there on Microsoft. I've got the stop loss kind of tight compared to you know, anything else. Well, do I, or do I have it right here? Let me check out. Where do I have that stop loss? Stop loss is 288.50 on Microsoft. Oh no, so it's sitting back here. Good, good. That means I'm following my rules, because my rules are this thing has to break out, come back down, and then make a new breakout. So I'm not going to move my stop loss to 296 until I see it break out of whatever, you know, because it'll go up and then you don't touch it, but then it goes up, breaks above. Great. Now move the stop loss to there. Now it broke above there. Oh, okay, great. Well, now I can move the stop loss higher, which actually was right below that line. And that's where it has stayed. It ran up, but it hasn't like made the dip and come back up again. All right. So then now let's have a look at Spotify. So Spotify is doing well. It's you know, 2,000 is what I risk every time I put on. If it gets to 1,000, that would be my, you know, initial quick hit. But here I'm all the way up to 3,500. So that's really interesting, because now I saw this on this day here, the gap, and then the entry. Let's see which price I got in. Yeah, average fill is 218. So I love this because I don't even have to have a great fill. So 218 is like right there. So it's the next day I get in, I get 218. And I mean, it's been fantastic, right? So where is my stop loss? Well, I haven't set a stop loss because, you know, it hasn't dipped, pulled back, and gone up. It just keeps going up and up and up. But it's about time that, you know, I'm well above my expectation. So now I need to increase my stop loss. I've got that at 200. That was where I sat initially because it was down below, right? So let's at least move it here to 221. I think, in fact, I want to use this gap. I want to put it right there at 237. I mean, this is really a good move, clear up here at 249. I would feel comfortable just taking it off. But I'm going to actually let it run a little bit, see if I can, you know, maybe this, maybe that. But because, you know, it's good enough. So modifying the stop loss, then we'll call it 237. And did that? Yes, it did. Okay, great. So now the stop loss will set there. Now, the reason I'm taking you through this, the reason I'm doing this is that this kind of situation is what you need to have in any trading system. You need to have something that somehow creates, you need to have a rule that somehow creates a bigger, better profit than you're expecting. I might be expecting to get from here to here, but I wouldn't necessarily be expecting all of this. So how could I have rules that would do that, that would make me move from there up all the way up? Well, the answer is that I've got to have a rule like I described. If I get into trailing stop mode, trends continue. That's the way random data works, is that trends continue. And so when I create a rule that just does a trailing stop and moves it up, then I'm taking advantage of, I don't know how long that trend's going to last. Charles Dow, the person that is attributed to modern Western technical analysis, or that study is mostly attributed to, he used to always say that I can tell that a trend, you know, where the trend is. I can mark where the trend is. I cannot predict when a trend will start, and I can't predict how far it will go, but I can tell you it'll be there, right? He wasn't studying Brownian motion and all of these random arcsine laws, what I use to talk about an equation. He wasn't studying any of that. But what he said actually described the reality of random market data, which is that markets tend to trend. And although you can't plan on them, you should have a rule in your system that takes advantage of them when they do occur, which is why I look for gaps and tall ranges, because that's like it's moved the data. It's been whatever catalyst happened that moved the price in such a way that, hey, from here a new trend could continue. Anywhere is where a trend can continue. But if you have a statistically outsized move, that has a small increased likelihood that the trend will continue in that direction. It's truth. So I like to set up trading systems that have this sort of trailing stop as one of the ways that you get trades out of it, or you get extra moves out of it. Okay, so if I come back here, Apple, the other one I mentioned was NVIDIA. So NVIDIA has this big jump up, and it's looking like it's getting ready to break out, but that may or may not continue on, right? If in fact it comes down, again, we're way above the 20-period moving average, and that it's going to be easy for us to grab the low price on this. All right, now this NVIDIA chart's really good for me to describe what is a weakness of this particular indicator set, and gives me a chance to talk about why I still think it's good even with this weakness. See right here, any of these times you're buying these lows, these are all great buys, great buys, great buys, right? But what about that one? That one, yuck. We only know this in hindsight because we don't know where these lines are going to go. These lines aren't predicting that they're going to keep going up. They're just sort of giving us the top and bottom of wherever the prices are going. So if you buy it, it doesn't mean that for sure it's definitely going to go up. In this case, it went straight down. If you had bought that trade, you would get stopped out. If you bought that trade the next day, you get stopped out. And this one, probably not. You don't get stopped out of these two. In fact, these turn out to be really great trades if you're buying them. By this time, the moving averages started to flatten out, but it hasn't turned down. Like with AMD, it turned down. So if it came down below the green line on AMD, I wouldn't want to touch it. I actually want to get a breakout on AMD. But for this one here, see, you could still be a buyer here. All right, so what is the weakness? The weakness is this trade could go south. The strength, look how many times it doesn't go south compared to how many times it does. You got 1, 2, 3 for the good, 1 for the bad, 2 for the bad, 4 for the good, 5 for the good, 6, 7, 8, 9. This one's going to be a bad one. You probably get stopped out on that. So 3 for bad. We're going to go conservative and call that one bad too. 4 for bad. This one's good though. This is really good, right? So you get about 10 good ones and 4 bad ones. See what I'm talking about? It's like, generally speaking, that's a good entry. It tells you, it gives you a lot of frequency, a lot of chances, and your chances are almost going to be 2 to 1. Well, I mean, this isn't representative of every one of them, but as long as that thing is moving up, that's the kind of thing I've tended to see. Because what this system does is help you buy the dips. We're already in an upward trend. We just want to know, when does it dip a little bit in a effective way to do it. And you can use this on anything, any forex or stocks. In fact, one thing that's been going pretty strong right now is cryptocurrencies, Ethereum, right? Let's have a look at how I would use this with cryptocurrency. So here's ETH. If I were buying cryptocurrency, once I saw that trend start to go up, which it is now, anytime we hit that lower green line might be interesting, right? So there's that, there's that, there's that. That one even made a touch there. Not quite, not quite. That one right there, these are all great entries. We don't have any bad entries on this time around. And let me go back, on Ethereum, okay? Because Ethereum had this really wonderful move up. Any one of those are going to be fantastic buys, right? So right in here, though, there's your bad one. So you buy that, and this is if you're being aggressive. Most people, cryptocurrencies, they buy and hold. So, but if you're trading it like a stock, and you got in here and you set your stop loss down there, you would have gotten stopped out. So that's a bad one. But look how many good ones there are, right? So many all along the way. Then you come along to this, and that one's not quite. Well, that one is. That one comes down below, and depending on where you're going to get out, those could still be good because they ran up quite a bit. But either way, you got to say that one's a bad one, and that one's a bad one. It goes up, and then these are all going to get you stopped out on this huge down day on Ethereum, right? So if I try to, I get one, I get two bad signals. But if I bought this day right here, it really depends on where you set your stop loss. If you're buying after a big down day like that, and you're setting that stop loss, yeah, you are going to get stopped out there or later out there. But this one here, well, okay, hang on. Would I be buying this one? I got to tell you, no, I would never buy that, because what am I looking for? I'm on this upward trend. And it's true that the line hasn't fully curled over. It actually did start going down just a little bit at this day. So, but I mean, I'm just looking at it visually. That's the whole move. I'm talking about buying clear at the bottom of that move. If I'm down there, guess what's going to happen to the line? It's going to start trending down. So all of this with the line trending down, I'm not touching any of it, because that's not my game. I want to buy the dip. This is not a dip. This is a swoon, a correction, a crash, whatever you want to call it. This is, I got to wait until that thing starts turning up. Okay, right here, as of this day, these days, now I'm in an upward trend. Now I can buy the dip. And where am I going to buy it? I'm going to buy it here. I'm going to buy it here. One of these 2 days, and you get it. From that point on, it hasn't looked back. Where is it right now? Should I be buying it? And that's no. I mean, this is a trading system we're talking about. It's cryptocurrency. If you want to buy a cryptocurrency and hold on to it forever, then it doesn't matter where you buy it. Just buy it. But if you want to trade it, if you want to get in and you want to get out, this is the method for that. How about Forex, right? Aussie yen. Back here, we got some really good moves. All of these are good entries. They're all good places to buy the dips. There's a good place to buy the dip. How about this? This is a bad one. That one's going to get you stopped out. But the one right after turns out to be a good one, right? And so hopefully you can kind of see my reasoning with this. So that one turns down, so you probably wouldn't buy that one. But then all of a sudden it's going back up. So great, you're going to buy that one. None of these are going to pay you until you get to way up here, but they all eventually do work out to be good. Here's a bad one, and then after that it starts trending down, so you don't touch any of that. Now this is assuming you're long only. Of course, in Forex, you're fine going long or short, right? Buy the yen, sell the Aussie when you get this sort of bad one. In fact, this one you can totally anticipate. See how it's going flat, and then right here it actually starts ticking down a little bit. Great. Well, then when it drops down like this, then sell the red line, sell any excursion above the red line. So that one right there would be a great short entry. And all of a sudden now, if you're oriented short on the Aussie yen, there, this one for sure there. I mean, this is a fantastic move going short, right? But now, as of right now on the Aussie yen, see, what have we done? We've turned around. That was the last of the short plays. You should be out of them by now. and that thing has turned up. And so now we're looking for a long, looking for any time we can buy the dip, and we're looking for long on Aussie yen. So that's how that system works. I hope you liked it. You know, if that's useful to you, fantastic. I would love to hear you give me some feedback on whether you like that. It's a short-term trading system, but it works on forex. It works on stocks. It could even work on cryptocurrencies. It definitely works on things like futures as well. But you know, as with all of them, you've got to have your stop loss properly set. All right, and then that brings me to gold. So gold looked pretty good here on Friday, and this is very possible that gold's going to get some good buying opportunities in the next few days and weeks. I didn't feel like it was the number one idea coming out of you know, to start Tuesday with, but here you can see we've got lots of opportunity for this to yeah. I'm gonna see if I can change my sharing here. Hold on a second. Move my screen over here so I can do this. Can I do that? Come on, move with me. There we go. All right. I'm going to put this here, so I'll have to turn my back around. Okay, there we go. All right. Hopefully this is working for you. You can still see my screen being shared, and you can see me up in the corner. All right. So what I was saying is that gold has just turned up on the moving average, and I feel like this is going to be an opportunity for us to watch for dips as it comes back. If in fact it keeps trending higher, see, it hasn't really broken out of that move, but it could. And if it does, then anytime it pulls back, it's going to be a fantastic buy the dips play as it trends higher. Now, if gold's going to be good, then you're going to have to look at gold mining stocks or gold streamer stocks. This one, RGLD, tends, not always, but tends to lead gold, the price of gold. Because when people anticipate the gold prices are going higher, they tend to like to buy this company. But it's not doing that right now. So either this is a really good opportunity, or you got to wait until you see the 20-period moving average turn up. However you want to look at that. Other possibilities might be Newmont Mining, which actually has a really nice gap potential change of trend there with that. Barrick Gold, similar to just gold itself. That's GOLD. It's not actually the price of gold. It's the price of gold mining company. Freeport McMoran is another one, but it's, I mean, this chart doesn't look particularly good at all. It's just if you knew gold prices were going to go up, then maybe you could get something here. Although Freeport is more associated with copper. See, there's JJC copper. All right, so one more. This is a low-priced sort of small-cap junior gold miner, Eldorado Gold Mines. And yeah, I know the name, right? But wait until you see this thing turn up, because if gold prices keep going up, then this one will go up. And when it does, that could be a really good move, even if it just got back to where it was up here. You know, that's basically 9 to 12, 25% move. Real opportunities there. All right. What I want to also talk about, though, is uranium, CCJ, Camco, or URA, which is the uranium ETF. That's a little less heavily traded than Camco. So, I mean, you know, either one of those. But you see how they're all just like launching and they're way up top like that. This is not a good time to be a buyer of these. They're expensive. They're not cheap. But it wouldn't take much in this nice strong trend for them to pull back, and you could figure out where to buy the dip. That would be worth watching. Another commodity that has really taken off with, or that really took off on Friday though, is lumber. So there's wood, WOD, that's the ETF that tracks lumber and timber. The other is cut. Yeah, right. Yeah. So both of these look fantastic in terms of they're trending up. Any little dip could be a good opportunity. But you know, again, they're expensive right now. So Weyerhaeuser is even more heavily traded than all the others. Weyerhaeuser is a timber. They're a paper company, but really what they have are vast forests in eastern Washington State, and I don't know if they have property up in British Columbia, Canada, but I wouldn't be surprised if they did. They have vast forests that they manage. So this is an amazing thing. I went there when I was younger. I worked up in this area, and I remember one day I'm driving down the highway and there's this huge plume of smoke going up, and I thought, oh, that's an incredible forest fire. Where is that? And it was almost like a mushroom cloud. But you know, nobody was worried, and of course there wasn't any sort of shockwave or anything. What is going on? I've got to go see this. So I drove about 10-15 miles out of the way just to go see where it was, and I found myself going up this forest road, just literally chasing this fire to see what was going on. Get up there, and here's a helicopter flying around in this ravine, dumping, like, I don't know, napalm or boiling oil. I don't know what it was, but it was literally just, it would dump this fire out onto the ground. And they were burning trees. They were burning trees because they had already cut down the trees in that area. And now they were just burning them, turning them to ash, reinvigorating the soil. They have a 40-year, so I talked to somebody like, what was I looking at? Why were they helicopter burning all of this forest area? And he explained to me, is this, what Weyerhaeuser does is they have this 40-year, these pine trees that have a lifespan of about 40 years. And then it's like, this acreage is this set of 5 years, and this, you know, they schedule it all out. And it's just it's farming. It's farming on a much longer, slower, bigger scale, right? So a company that is a professional lumber and wood processor. Now Weyerhaeuser is known for paper, but I mean, it's just wood and timber management. So when you see cut and wood doing well, chances are this company is going to have the same dynamic going on, and so it does. You can see here it doesn't really move around a lot. It's got a fair dividend, but it makes for a great trading stock because, you know, you can buy these dips, sell those highs, and over again. So anyway, those are things that when you see these opportunities take off, then you go looking for stocks that follow them. And if you use this pattern, what I call the buy the dip indicator set with the Keltner channel and then there's just lots of opportunity there. And if you also use it, oil, yes, thank you, Alexis, great question. You're getting the idea, yeah? So here is oil. Oil has, this is why I didn't feel like it was an inflation trade, because if it was inflation, oil should have been on the, you know, moving up. It wasn't. On Friday, it sold off. So it is what it is. But what happened, we got that tiny little turn up on the 20-period moving average. Possibility that we're going to see this continue to trend up going forward. So if, I mean, maybe this was kind of your point, Alexis, is that oil could be, if in fact this whole dynamic turns into an inflation trade, then yes, that is absolutely going to be an opportunity for people. And so not only oil, but oil stocks, right? But if I just did OIL, that's one. Here's another one, USO. That looks a little better. Even better as far as trading purposes are concerned are going to be some of the oil stocks. ExxonMobil, no, that looks terrible. That's a downward move. But wait, if oil gets going upwards, then it'll be right behind. Let's look at a couple others. Chevron, no, it looks the same. How about Halliburton and Schlumberger? These are oil equipment. So now that one's starting to make its turn. SLB, not quite there yet, but those would be ones worth watching. SLB and HAL stocks, and they're low priced. They're low price. So if in fact oil starts, this is really oil exploration, and when people want to dig and mine for that, which to me seems like it ought to be, with oil prices moving up as high as they have. But it's about the pandemic. It's people feeling like, well, we're not going to travel, we're not going to, I don't know. I think that could be coming to an end. And how do we know? Well, we don't, but this is the stock to keep an eye on. Carnival Cruise Lines. If cruise lines, if people start going on cruises again, then we're done. The pandemic is over at that point, right? Enough people get the vaccine and that sort of stuff. Vaccine, yeah, I know. But and I'm not an anti-vaxxer. I'm just aware that okay, I've got to make this little side movement. So full disclosure on my points of view of this. I feel like the whole idea, the thing that they're pushing through Pfizer and Moderna, compared to Johnson & Johnson, even the Johnson & Johnson, all this stuff is a new chemical treatment. And to call it a vaccine is a little misleading because it makes it sound like, oh, it's what we stopped polio and smallpox with. It's not. It's something different. And it's a little untested. And so now, just this past week, we got FDA approval for the Pfizer vaccine. Well, that sounds good, because FDA makes you have to go through rigorous trials. In fact, they did publish data about a 6-month study, and this is available. You can go find it online and download the actual study. There are a lot of places where the data is available from. But if you look close at the data, there's one fact that really stands out to me and is kind of a huh. Okay, so they had 28,000 or so, or is it 21,000, 20-some thousand in the control group, and 20,000 in the test group. So they had a placebo, and they had the vaccine. 20,000 plus people in both groups, right? And they showed that people that had the vaccine tested positive less often, so it's like 90% of the time. So it was 90% effective in making sure that these people did not get the COVID virus, Delta variant and all, right? So that's good, right? We should love that. And I applaud them for that. But the comes down to the death side. So in both groups, there were the same number of deaths. Well, okay, there was 15, 14. The vaccine had 15 and the placebo had 14. That's a small sample. It's not like that difference between 15 and 14 means anything. No. What's more fascinating is that they're the same. Why would the vaccine not make it less lethal? If you took the vaccine, shouldn't you have less opportunity of dying from? I mean, it's not that lethal of a disease anyway. And look at those numbers. This population of people, these weren't people that actually got it. These were just general populations of people, right? So this general population of people had the rate of contracting of 1/3 of 1%. And not contracting. 1/3 of 1% of the people died in this study. But it was the same group. It's like, shouldn't a vaccine be effective, more effective than a placebo for keeping people from dying? So I don't know. That's a and so while we do have the trials, I'm not feeling like I need to run out and tell everybody, hurry, go get vaccinated. I really think it is morally wrong for any government to insist and require that you jab something into your body and take a generally untested or, unproven treatment. And I think that is should be legally wrong for any government to do that. My opinion. Just my opinion. So more of a libertarian than an anti-vaxxer. Anyway, so what am I looking at here? I'm watching the cruise companies as a way of knowing whether or not the pandemic socially is over, whether people are done thinking about the pandemic as, you know, something we all have to hunker down and be afraid of and be worried about and so forth. And not yet. We're not there. Not yet, right? If I look at Carnival Cruise Lines and realize that, hey, there have been people that have wanted to, you know, jump onto this as early as they can, but why is that not moving? There we go. Oh, because I only have a certain amount of data. One here. There we go. Okay. See, so back here, last fall, people were like, oh, hey, we're done, right? And they started running up Carnival Cruise Lines. Since then, Delta variant, high gas prices, whatever, they've like, maybe not yet, right? But soon, and before too long, and we've already begun to sort of slightly turn up. In fact, right now, what are we doing? We're dipping down and hitting that green line. That's it right there. That's actually a buy the dip. It's kind of aggressive. If you want to call this an upward trend, then yeah. And I don't know that I would say this is it. It's enough to declare it over, but it is enough to say I could be aggressive and buy a dip. Remember, it might be this horrible, you know, but if you bought here as an example and you set your stop loss there and you said your profit target right at the new high, then when it comes up, if it runs up in the first 3 or 4 days and hits the high, great. Get ready and just do this again. Just buy this dip again. But if it runs up and comes close to, then just move your stop loss to the most recent low and follow the little trail the stop loss up technique. And this could be a tremendous trend. I don't feel like it's ready to take off yet. One of the biggest reasons is we're coming into hurricane season, not cruise season, right? So I feel like maybe we're going to have to be into the end of the year, December, January, for cruise stocks to really attract a lot of attention and be good. On the other hand, if you were willing to buy here and set your stop loss down below 20 and just be patient, maybe you get in early. I don't know. But that is the sort of pandemic indicator, Carnival Cruise Lines. If Carnival Cruise Lines is doing good, then the market thinks the pandemic is over. And with that thought, I'll leave it with you here. We don't have the market opening in 1 minute like we typically would at this point, but hopefully the ideas and insight that I've been sharing with you is worthwhile for your own due diligence and knowing what stocks to look for and to consider buying in the upcoming week. 24 hours from now, when the market does open, I'm going to have my eye on AMD and a few of these others for the reasons I've mentioned. Until then, until we get back together and do this again next week, take care.